Good morning. Welcome to Trading Hour on CNBC TV18. I am Hormuz Patakia. It's 11 o'clock and the market is showing signs of some bit of exhaustion at higher levels. Now, if you run a marathon at a 100-meter dash pace, then it's of course you see some signs of exhaustion there. 23,411 was the high it made yesterday. It struggled to survive at those levels. It closed below 23,300 on Monday, and now after recovering from the lows of the day, which is at around 23,220, it's a 100-point recovery from the day's low. So starting to pick up some steam is the market, the Nifty there now back above the mark of 23,300. The question is, will that sustain? The Nifty Bank as well, that is the level, the key level to watch out for on the Nifty Bank is 50,000. It managed to cross that intraday yesterday, has failed to do so. But failed to sustain above those levels. Again, found some support at 49,550 and now 300 points off the lows of the day. Time to say hi to Surabhi Upadhyay.
Hi, Hormuz. I guess the mid-cap market is showing plenty of flair, right? That index is really surging away, bursting higher, 0.8% higher. And a lot of the stocks that are moving up today reflect this optimism around the political continuity. That's what the narrative really is. So whether it's railway stocks or, certain other PSUs or stocks that are linked to maybe rural housing finance companies, that's where the action is. So IRCTC, Hoodco, something like a Jupiter Wagon, look at a RailTel. So it's cutting across PSU and private sector names, where even in the private sector, where there's hope of better tenders, more ordering activity as the government continues on many of its flagship programs. And that's really what the action is all about today. Talking about some of the newsmakers, and we'll get you more details on these stocks as we go along as well. IRB, Honasa and Interglobe Aviation, in case you're wondering why these stocks have been down between 4, 5, 6, 7%, big cuts right from the morning. That's because of block trades and pretty significant block trades that have happened in all these companies where noticeable insiders have sold today. So we'll get you some more analysis on this as we go forward as well. But otherwise, it's a good screen. HCC, a stock that Hormuz was talking about in the morning. He picked up this note from Elara, where Elara expects a complete turnaround in HCC. That stock also, and it's like at the right time as well, right? Your infrastructure is such a big theme all over again with Modi 3.0, and then there comes this report. So it's working well for HCC.
You know, all of these companies, right, who were almost down in the dumps, say 4 or 5 years ago, HCC is one, Suzlon is the other. Now they're just trying to be those who are at the right place at the right time, as you just said. Infrastructure is one theme. Then the renewable energy space is one theme. Suzlon just won an order today as well. It was the 4th order that the company has won in possibly the last 3 weeks after a prolonged period of lull of almost 2 months. So that stock as well. Now it was in the news yesterday for some negative developments, but 1.5% higher now is Suzlon. But time to get in our first guest for the show. Dheeraj Sachdev, the managing partner and CIO at Roha Asset Managers, is joining in now to talk market fundamentals and his top sectoral picks. Dheeraj, good morning. Thanks a lot for joining in. I guess now with this political continuity and all this uncertainty around it out of the way, there was this dramatic shift in narrative around PSUs after the election results, and suddenly almost every participant on the street who was extremely gung-ho until the exit poll results suddenly turned extremely cautious. Some of them even exited their positions, some cut their weightages. With the current government now back in shape the way it was, does the narrative change again, or with the focus now shifts back to earnings growth and some more fundamentals?
Hi, good morning, Omraz. Well, with government's portfolio distribution across ministries, it is now very clear that policy and reforms are likely to continue. Now, given the earnings support, rising retail equity culture, or global flow and government's announcement with respect to roadmap for the first 100 days, it is highly probable that market will sustain rally to a pre-budget euphoric peak before a prolonged consolidation or lull phase sets in. Now, the continuity of reformist government is being anticipated by the market, and along with better earnings growth will be the drivers that will push markets to higher levels. Now, broadly, we remain positive given strong capex from government side across sectors of the economy like infrastructure, besides thrust on improving manufacturing cycle and ongoing reforms in the power and renewable sector per se. Besides, rural focus is being anticipated like low-cost housing, agriculture, and provision of drinking water for all. And these will only gain momentum in times to come. So, and governments has the bandwidth now to fund such large capex or undertake fiscal expansion by PSU divestments or RBI dividends or higher tax collections. So there are structural changes. As you mentioned on the PSU side, there are PSUs in defense, where the procurement with focus on local manufacturing and huge acceleration in capex on railways, electronic manufacturing services that has witnessed that can be witnessed over the next decade. So there is a long runway to growth. Our stocks in the segment of defense, railways, EMS may have largely moved ahead of time or have given upfronted returns far ahead of their earnings. So one has to be cautious in these spaces in the near term and elongate investment holding period now to say beyond 3 to 5 years, as the business outlook and earnings growth appears to be durable, but a lot of earnings are already getting discounted upfront. On the other hand, what we like are the sectors where the market is completely or not discounting fully, which are worthy of investing, include financials, pharma, agriculture-related sectors, cement, or select infra construction companies, including engineering companies, where their margins have bottomed out and they are not fully discounted in terms of earnings growth potential. Hence, these sectors would be preferred compared to railways, defense that you talked about on the PSU side.
Got it. Dheeraj, hi, good to have you on the show today. So again, continuing with Hormuz's question, the other major narrative that we saw over the course of the last week was that, okay, this government will start being a little populist. It will spend a lot more than it has in the recent past, and therefore you need to be with rural-facing themes. So there was this big move towards FMCG. What did you make of that, and do you still agree to it to some extent? And how are you looking at bottom of the pyramid consumption? And if at all you would want to play it, it would be through what kind of companies and stocks?
Yeah, hi, good morning, Sulbi. So there is obviously hope for revival in consumer-oriented sectors led by better monsoons as La Nina takes over, and also based on expected rural thrust in the budget. So obviously we can expect some possibility of social expenditure which will continue. And government's even socialistic expenditure was continuing, like Har Nal Se Jal. There were a lot of water pipeline companies which have done extremely well on the earnings side. Housing finance companies on the low-cost housing, affordable housing, where they are talking about building almost 3 crore houses. So there are a lot of these pockets which were already being continued, which are already existing from the government's capex program or socialistic expenditure. And not just that, now there is a coalition government, there will be more renewed thrust. So I think these things will continue and sustain going forward. And added to the fact is there will be better monsoons, which will revive some consumption demand. So consumer durable could be one of the places. Housing finance companies that I talked about, the pipeline companies, the pipe companies that provide drinking water, sanitation, etc. Building products companies with boost in the affordable housing segment, etc. are the spaces that one can look at.
And speaking of underperformers, the other space that has been a rank underperformer in the recent past is specialty chemicals, Dheeraj. But some of the data that has come in for the month of May, now that the Phillip Capital note that says that the volume-led growth has continued in the month of April and May as well, and that contributed to the highest ever exports in the fourth quarter of FY24, which is so it's a continuation of that. Now, at these prices, Dheeraj, do you think that okay, the sector has been an underperformer? We can take a bet on this, wait for a quarter or two before things change, and then it starts to show up once the cycle turns?
Rightly said, specialty chemical sector in the near term has been passing through inventory destocking issues, resulting in lower export demand. But we are seeing that pickup is happening. And the worst of the margin of the pricing competition from Chinese players, especially the imports, has been pretty aggressive prices, and that has affected the domestic manufacturers on the chemicals and specialty chemical side. So I think that destocking phase may be over, and the worst may be likely behind, though the time and the pace of recovery remains uncertain, given limited visibility on the extent of inventory levels across various parts of the channels and unpredictability of Chinese players' pricing strategies. At a broader level, export growth should likely begin to normalize over the next 2 quarters. So the stress of demand conditions and margins are close to bottom and will only improve going forward. So structurally, the sector will continue to benefit from expected and gradual China plus one strategy to have India as an alternate supply source. And importantly, new project capex appear to favor either backward integration or import substitution or new molecules with export opportunities in this sector. So obviously, one can be a contrarian, and the worst of the margin cycle may be behind.
Okay, got that. So, what should the portfolio strategy be, Dheeraj? I mean, overall, just give us your bird's eye view. which would be your biggest overweights right now? You know, if there's a churn in the portfolio that you're looking at, given that we're at all-time high levels, just run us through the strategy.
So what we are having is in the portfolio, we have financials, which include private financials, NBFCs, where I think after the recent RBI diktat, the valuations have become attractive. It could be microfinance, housing finance companies, or some of the SME finance companies on the NBFC side. Pharma is one particular area, be it either domestic or some of the export opportunities that we have taken as an exposure. Agriculture theme, I think that can also turn around. So whether it's agriculture related sectors, including agrochemical companies that we talked about, can see some kind of a margin bottoming out. Cement and infra construction sectors are the ones that we have part of the portfolio. So I think there are plenty of spaces to play on, including some of the selective manufacturing sector companies. And the portfolio can be filled up across these diversified businesses to play.
All right, Dheeraj, we'll leave it at that. Thanks a lot for sparing time and joining us today and sharing with us your sectoral preferences and the road ahead for the markets as well. That was Dheeraj Sachdev there of Roha Asset Management. But pull up the real estate index as well. That has been an outperformer. It is up for the 5th straight day this morning. And with today's move, it has recovered all the losses that it made last Tuesday. So 1.5% higher again for the real estate index, up for the 5th straight day. Now remember, last Tuesday the real estate index was down 10% as well. So it has recovered all the losses, one of the outperformers in today's trading session. But time for a short break here on Trading Hour. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta joins in.
Okay, so it is green all the way, and it is records for the mid-cap index as well. Very buoyant broader market, and we've got those fresh highs for the mid-cap indices as well. Why should mid-caps be left behind? Nifty did it, Sensex did it, and now we've got the mid-caps as well, really charging away on the broader screen today. Let's head across to Manisha now, find out what's happening in the commodity markets. There, the headlines have been actually crude oil because prices have been above $80 a barrel all over again. Manisha, what's the latest?
Well, thank you for that. We have a huge surge coming in for the crude oil prices. If you look at the markets overnight, we've seen almost 3% of a jump come in for the crude oil prices there. And this is after 3 weeks of decline that we've seen come in for the crude oil prices. Well, a bit of a decline from those 82 kind of levels that we saw in the prices. But the support continues as OPEC and allies, there is a statement coming in from them that earlier it was about easing of output cuts. But now we have Saudi Arabia minister saying that maybe they will take a reassessment of the markets as and when they see prices and demand going forward. Well, remember, it is the monthly report from OPEC and IE as well that comes in today. So some more details is what perhaps we could be looking on from that as well. The second point really is about the kind of economic data that the markets are looking at. Stronger numbers from US show that the demand there could be on the positive side. And apart from that, since the WTI prices are trading at around 79, remember the US also has to buy crude for their strategic petroleum reserves. That could be happening as well. The US summer demand numbers also are expected to be on the higher side. There have been some initial reports suggesting that this could be the best summer demand season for US in last couple of decades, and that is where the markets are taking cues from. And then there have been statements from Wall Street banks, UBS and Goldman Sachs, for example, who anticipate that going forward in the third quarter, there could be a deficit in case of crude availability globally. The markets also are anticipating a demand growth of anywhere between 1.2 to 2.2 million barrels per day. So stronger demand, decline in inventories, the US season seemingly good. And then, of course, the Atlantic hurricane season also starts from this month. So the markets are taking in all of that premium in case of prices. The street, of course, will watch out for the US inflation data that comes in tomorrow, and the further direction would come in from that.
I guess we'll have to start looking for newer metaphors now when oil prices rise, because oil on the boil seems to be done to death now. We should start looking for something new. But Manisha, thanks a lot for that update. Oil prices up overnight and plenty of cues to track within that space as well. But time for a short break here on Trading Hour. Back on the other side with market technicals, Mitesh Thakkar will join in with his top trading bets. Back with us on Trading Hour and some important movers in terms of stocks in today's trading session. One of them is HCC. We've been speaking about it since the morning. The stock was up at one point, was up almost 14%, 11.5%, holding on to its gains. 45 now on HCC, 11.5% higher. And that is because Elara, the brokerage, has initiated coverage on the stock, and this is the first initiation that the stock has had in possibly multiple years now. The buy rating, the price target they have is 63 rupees, which is almost 58% upside from Monday's closing levels. Now, what they are saying is that HCC is poised to regain its lost glory after almost a decade-long effort that has led to an improvement in its financial performance. So that is a positive as well. Now, what they are betting on is a 1.5 lakh crore nuclear opportunity in the country, and they say that HCC is well placed to capitalize on that because of their experience in executing in-house complex and marquee projects, the 26% share they have in the hydropower capacity, the 60% share that they have in nuclear power capacity, which is the civil nuclear power. All of this now bodes well for HCC to capitalize on this opportunity. Now, what they can also do is they can bid for newer contracts, and that is after the recent credit rating upgrades that they had. Now, ICRA had upgraded their ratings in December last year. CARE Ratings had done that a few days later in January at the start of this year. So now they can bid for new projects, and also they can bid for it because the restrictions on their bank guarantee limits have been removed because of the completion of their debt restructuring and all of that. So that is another positive for for HCC. Now, Elara also says that it is expecting a standalone revenue and EBITDA CAGR of 20% over FY24 and 27, and for the same period, it is expecting an earnings CAGR of 50% for HCC. So positive commentary coming in from Elara on HCC. As we said, being at the right place at the right time might just be another turnaround story.
No, absolutely. Who knows? And the market is definitely excited about the prospects today, going with Elara's reasoning. Let's move on and take a look at some more stocks that are in focus. There's Tata Chemicals, which is on the radar. Stock is buzzing in trade after Centrum indicated that demand for soda ash has been rising and global supply conditions could result in Tata Chemicals raising prices of soda ash. We have Sonal with the details. Sonal, this could be very favorable for Tata Chem.
Oh yes, because we have seen in the past, actually it's been months and months, that Tata Chemicals has gone ahead and only cut soda ash prices because of oversupply, because of demand issues as well. The news now is that American National Soda Ash Corporation, or ANSAC, they've gone ahead and increased soda ash prices in the US from 1st of July by $25 per ton. It might look like a small amount, but it has come in after months of cuts in soda ash prices. This is all non-contract sales of soda ash and on contracted sales when contracts allow them to do so. The ANSAC president also says that they are seeing a tightening of the global soda ash supply environment, leading to an increase in demand for their soda ash. Now, what this means is that maybe the other players, including Tata Chemicals, could go ahead and increase soda ash prices, especially in the US market, which has been facing a lot of pressure in terms of demand and pricing. Tata Chemicals was a member of ANSAC, but they withdrew only from December 2022. But if ANSAC is increasing, there is a possibility that Tata Chemicals could also go ahead and increase prices. Now, Centrum says that this is positive for US national soda ash prices because they were languishing due to new Chinese synthetic capacities coming by. Also some demand pressures in Europe, also about the fact that Turkey was the new place from where there was a lot of dumping for soda ash as well. So all of this could be taken care of maybe from here on, and there is a possibility that soda ash prices, at least in the US, will see an increase, which could be positive for soda ash prices globally.
Finally, some positive developments for Tata Chemicals, and especially that after the Tata Steel listing, the news that came out, the resultant surge and then the correction. So that a positive development there for Tata Chemicals. So thanks a lot for that update. Now getting a quick check on the technicals for the markets. Mitesh Thakkar is now joining in with his ideas. Mitesh, good morning. Thank you for joining in. The market finding support at lower levels in the Nifty is 100 points off the lows of the day. So it says that there is some support on the downside, but does it have enough legs to go back to 23,400 and then scale further higher from there?
Morning, Hormuz. I think 23,400 in fact would be the important level. I think 23,350, 370 has seen a couple of hourly highs. My level to watch is 23,370, 380. If that is clear, then I think we are looking at levels beyond 23,650, 700. So I think that's the level to watch out for. The overall structure isn't negative, but given the fact that since the last Tuesday, from the lows of 21,800 odd levels on the hourly closing basis, I think we have rallied by about 1,600 points. So the initial feel is that there should be some more consolidation. And since the direction is on the upside, I would want to buy on declines in such consolidations, 23, 150, 100 being the preferred zone. So trading with long buys on stocks, but on index, I think either you buy on a breakout or you buy once you get some kind of a pullback.
Okay. So that's strategy on the index. What about individual stocks? It's a very green market for mid caps today, Mitesh. So any new trades coming to mind?
I think the market, as you rightly said, is very nice and it's showing good traction, and the breadth is very good. So I have a buy on Excite. It's just breaking into fresh highs. So keep a stop at about 529, 528 rather, and look for a target of 555. And the other one is Canfin Home Finance, which I would recommend buying with a stop at 774 for targets of 820.
Okay, Mitesh, this time we have some stocks for you as well because they're looking interesting. First of all, tell us about what do you think of HCC, the chart structure there. Suddenly, fundamentally, people are talking about a possible turnaround, etc. But is it showing up in the charts?
Oh, yes, very much, Surabhi. I think, see, the stock actually, if you look at the long-term charts, weekly and the monthly charts, we got a peak of around 45, 46, which was in February, and then a correction to about 32 levels. That correction is over. The stock has re-entered an uptrend, and I think now is just facing some supply around the previous highs. Once this level of 45, 46 is cleared, I think my bet is that the stock can head towards 60, giving you roughly about 33% kind of an upside. So very, very positive, but I would want to buy it either on a pullback or in case I don't get one, then on a breakout above 46 and take a 2.5, 3 point kind of a stop loss, which is about 43, and look for a target of 60 on the long-term charts.
Okay, that's HCC. And finally, Mitesh, once again, all these PSU stocks, right, especially the railway ones, Aircon, RVNL, they're all up. Even NBCC, Hutco, all are up on big volumes. So anyone who wants to take a quick trade, is it advisable? And which one would you pick, if at all?
In fact, while the structure is positive, I think the one which I like is RailTel to a certain extent. Recommend a stop below levels of 395, so it's slightly run away. So maybe you would want to buy partly now. If you get a 7-8 point kind of a pullback, add more there. Keep a stop at 395. The earlier highs of 465, 470. That's the range which I'm looking for the stock.
Interesting, Mitesh. Thanks a lot for that, for your index views and your stock specific strategies as well. Time for a short break here on Trading Hour. Up next, we put the spotlight on more stocks that are buzzing in today's session: Interglobe Aviation, Honasa, IRB Infra, Home First Finance. We'll find out why all of them are buzzing in today's session. Back on the other side.
The India Post Division have a tremendous role to play on a global stage as well as on a local stage to enjoin the hearts of millions of people across our country and across the world. Under his leadership, there has been a revolution in this department. And on this day, I vow to persevere and put in my best to ensure that we deliver according to the aspirations of the Prime Minister as well as the 140 crore people across the length and breadth of this country. It is also a little bit like coming full circle for me, because as mentioned, I worked as a junior minister in this department many years ago in 2007, 2008 and 2009. And therefore, for me, this is also a department with which I have had tremendous emotional ties. It is my sincere effort to ensure that we live up to the expectations of the people of India under the leadership of the Prime Minister. Thank you very much.
So anything on spectrum auctions, that will be one big
Nothing,
event.
no comments right now. You know my style. You have followed me in earlier departments. It's very important to roll up your sleeves, put your hands in, understand the department before one starts pontificating on what the priorities are and what needs to be done. So therefore, I would kindly request all of you to give me that time. And once I have done that, I will come to you with a full plan in terms of what our priorities are. That has always been my style, and I would like to continue down that path. So I urge you all to just have a little bit of patience for a few days until I get my learning under my belt. Thank you very much.
A vision for the first 100 days that you'd like to share? A vision for the first 100 days maybe?
This is my first day. So let me do my first day's work. Thank you very much.
All right, that is Mr. Jyotiraditya Scindia taking charge as India's new telecom minister. Remember, he takes over from Ashwini Vaishnav, who of course has his hands full with several portfolios, including of course continuity in the railways. But Mr. Scindia didn't oblige much with any talk on policy, and perhaps rightly so, saying that he needs some more time to fully understand all the important issues and aspects at play. And remember, this is an important, very important ministry going forward to determine whether India can be a healthy, vibrant three-player market or not. I mean, the government has a stake in Vodafone. There are 5G auctions coming up. So absolutely, hectic in terms of the agenda ahead for the new telecom minister as well as the ministry. Okay, back to the market now, which continues to track in the green, 56 points higher. Some more stocks on our radar, and let's talk about these block deals that happened early in the morning. We're talking about stocks like Honasa, IRB Infra, as well as Interglobe Aviation. Vivek is with us to give us all the details on them. Vivek.
Well, that's right. Prior to market open, we had intimated our viewers about, how there's likely to be large block deals in each of the three names that you just mentioned. So let's have a look at the internals of each of these block deals once again. IndiGo, like we mentioned, it's the current existing promoter entity by the name of Interglobe Enterprises that has sold close to 2% stake equity, almost 3,292 crore worth of shares has exchanged hands today. And post today's block deal, they will continue to hold over 35% stake in the company. IRB Infra, interestingly, just a couple of weeks ago, you saw the promoter entity selling stake in the company. Now today, one of the private equity investors, which is Sintra, which is an affiliate of the Italian company Ferrovial, has sold close to 5% stake. Now they held around 24.86% stake at the end of the March quarter. So they will continue to hold close to 20% stake after today's block deal as well, which was worth almost 1,900 crore. The last stock on the radar was Honasa Consumer. Over here, again, two strategic investors have actually paid close to 1% stake each. So total of 2% equity is what is expected to have changed hands. Base size of this particular deal was 140 for each of these players. So a total of 273 crore exchanged hands today. Fireside Ventures held 5.28% stake, so that's dropped down to 4.5% stake, and Sofina Ventures held 6.16% stake. That's also dropped by 1% after today's block deal.
Right, Vivek, thanks a lot for those updates. There are plenty of block deals continuing there. Yesterday, a big one in Emphasis. Today, three major stocks as well: IRB Infra, Honasa, IndiGo. All of them seeing losses of anywhere between 4 to 7%. So, block deal impact there on these three stocks. But moving on, the other stock that is doing well today though is Home First Finance, and that is following a bullish note by Investec. Abhishek is here to tell us more. Abhishek.
Well, Investec has written on Home First Finance. They have a buy recommendation with a target price of 1,200 per share. They say that, Home First Finance has crossed the rupees 10,000 crore of AUM with an ROE of 15% plus as of now. Best in class asset quality continues for Home First Finance. Focus of the annual report 2024 has been their preparation of the next leg of growth for them. So they are adding 3 new states, or they have added 3 new states apart from the 6 6 focus states that they were already operating on. So Home First Finance was operating in the states of Gujarat, Maharashtra, Tamil Nadu, Andhra Pradesh, Telangana as well as Karnataka, and is now eyeing growth in 3 emerging states, which is Uttar Pradesh, MP as well as Rajasthan. So they believe that Home First Finance is the most scalable, affordable HFC. The ROE has crossed the 15% level, can reach 18% by FY26. So they expect AUM to grow at a CAGR of 29% over the next few years, that is FY24 to FY27. They believe in 3 catalysts which will play out in FY25 for Home First Finance. Number 1, credit rating upgrade. Since the AUM has crossed rupees 10,000 crore level, they believe that credit rating upgrade is due for the company. Affordable housing scheme has got some booster from the government, as well as they are focusing on Pradhan Mantri Awas Yojana as well, and additional fee income from the insurance cross-sell, which is expected to boost for Home First Finance as well. Back to you.
All right, Abhishek, thanks a lot for that update, and strong going for Home First Finance. After that note, the stock is up 10% in today's session. They're 951 for Home First Finance, up 16% in the last 1 month, and an outperformer in the last 7 days as well. Most of it coming after today's surge. That is Home First Finance for you. But time for a short break here on trading. Up next, Moin Lada from Khaitan and Company joins us on the other side to discuss SEBI's discussion paper on the new norms for F&O inclusion. Stay tuned. Back on the other side.
Welcome back. So now we told you about this yesterday as well, reiterating it again, and now we'll get some perspective. What I'm talking about is SEBI's proposed move to perhaps overhaul the F&O market regulations a little bit. What happened was, just to recap, was that over the weekend, SEBI put out a discussion paper. It's a consultation paper right now, where SEBI is saying that basically there needs to be a relook into the criteria that governs how stocks are included in the derivative segment, the futures and options segment. Now, SEBI's contention is that this criteria was last updated back in 2018. It's been a while. The market has really evolved. Of course, the trading volumes have shot through the roof. So there's a need, perhaps, to strengthen the guardrails once again. Now, there is a proposal that's come through. We'll discuss that with our guests. It's tweaking quite a few parameters like market-wide position limits, etc. And if you go by this proposal, if this is indeed what becomes the new rule, then several stocks could go out, but several new stocks would come into the F&O market as well. So we'll discuss this bit by bit. And to help us navigate it, we have with us Moin Lada, partner at Khaitan & Co. Moin, thank you so much for taking this call. So let's get your first view, because this is right now a draft, but it is looking to change a lot of the definitions. I think a lot of the thresholds will move higher. As I said, market-wide limits, etc., the turnover. What did you make of this consultation paper?
No, I think, as you rightly mentioned, it was in 2018 when the guidelines were last looked at. So it is timely, given the COVID pandemic time, how the markets have really evolved. So it's timely that there's a relook being done. There are a few conditions and, quite technical points, but broadly what's being looked at is that what is the volume and what is the underlying. So long as the volume and the investor participation is good, you are continuing to be eligible. And I think in one way, it's going to also expand the opportunity. So there's a twofold impact I think it will have. One is that the guardrails will ensure that the segment cannot be used for manipulation in low volume stocks. Also, what it will ensure that new age companies who now meet these thresholds, who have good volume over the last few months, will now be able to get entry into this segment. So that's really how I'm looking at it in terms of the current proposal. Now, how effective this is really going to be, that will really need to be tested, and the real shape of the regulation will have to be seen, because as you mentioned, this is still a proposal.
joining in, and that's the point I was going to get to, what you just mentioned about how effective is it going to be, because if the guardrails go up, now if I remember correctly, in 2018 there were around 209 stocks that were in the F&O space. As of March 31st this year, there were around 182. So the number in the last 6 years, despite the market having evolved, the stocks have come down. Now, if these draft measures are put in place, then more stocks that go out of the F&O segment and more come in. But is this a way to ensure that, okay, fewer stocks, very well, but just to ensure that there is not enough manipulation, as you were just mentioning?
I don't know if it is fewer stocks only, while that could be one impact. The idea is to ensure that there is a limit to manipulation, and I think we've seen that trend. The regulator is having zero tolerance to non-compliance. We've seen slow and steady steps being taken, to initiate adjudication to make the market structure stronger, and this seems to be one of them, purely directed to stocks which may not have an actual volume, but which may seem active under this segment.
Okay, Moin, just for a bit, getting into the technicalities, I was I was reading up into the proposed, specific changes that SEBI is talking about. So at least 15% of trading members should be active in all stock derivatives, or 200 members, whichever is lower. Then there's a proposed condition saying trading on minimum 75% of trading days. Then the average daily turnover on premium basis should be a minimum 150 crores, etc. Can you just take us through your thoughts on some of these specific conditions, if most of them seem absolutely par for the course, or if any of them seem a little too onerous, or maybe too porous on the other side, that it won't be effective?
So you see, I think all of them, as I mentioned, are driven towards volume. So whether a low derivative turnover, a low market interest, a narrower participation, are these vulnerable? Are these going to, lead to manipulation and, expose investors to greater risk, etc.? This is really what's being really looked at. Also, what they are attempting to do and what's being really proposed is to have only stocks which have a sufficient depth in the underlying cash market. They have appropriate position limits, and they are sort of not as much volatile as some of the others would be. But as I also mentioned, some of the new age stocks would be likely to enter with the participation threshold that you just mentioned, which is the 200 and 15% trading in the last 75 days.
Moin, just stay on, because we'll cut across to New Delhi, where our colleague Timsy has just spoken to Arjun Ram Meghwal, who has just taken charge as MOS independent charge of the Ministry of Law and Justice. Let's listen into that interaction first, and we'll get back to you soon.
We are now joined by MOS Independent Charge for Law and Justice, Arjun Ram Meghwal. Sir, many congratulations. You've got this portfolio again. You've been re-inducted in this portfolio. Given that a lot of pending issues were there, especially when it comes to the recent statement by President of the country that a lot of pending cases are lying across the courts. You were also part of that entire seminar where she had mentioned specifically that the country should work towards reducing the timeline so that the cases are settled as soon as possible. What will be your intervention?
देखिए, जैसे आपने महामहिम राष्ट्रपति जी का जिक्र किया, वो किसी भी सेमिनार में या किसी भी सिंपोजियम में कोई जिक्र करती है, उसको हम गंभीरता से लेते हैं और उनकी कही हुई बातों पर हम सकारात्मक ढंग से निर्णय करने का प्रयास करते हैं. इस दिशा में ही आगे बढ़ेंगे.
क्या क्या इंटरवेंशंस हो सकती हैं?
देखिए, समयबद्ध तरीके से पेंडिंग मामलों का निस्तारण हो, उसमें हमें टेक्नोलॉजी का इंटरवेंशन एक बड़ा इंटरवेंशन है, जिसके कारण कई बार आपने देखा होगा हमारा ई कोर्ट का जो प्रोजेक्ट चल रहा है, ई कोर्ट प्रोजेक्ट 3, वो बहुत महत्वपूर्ण है इसमें. और मुझे लगता है कि वो जैसे जैसे लागू होगा, वैसे वैसे जो लंबित मामले हैं उनके निस्तारण में तेजी आएगी. और जो न्यू लॉ है, इनमें भी टाइमलाइन है, आप देखना. तो जब टाइमलाइन किसी की तय की जाती है तो मामले निस्तारित तेजी से होते ही हैं, इसमें कोई शक नहीं है. सिस्टम भी आगे बढ़ता है, इंफ्रास्ट्रक्चर भी बढ़ता है. ठीक है, thank you.
सर 100 डेज का एजेंडा क्या रहेगा जो कि
हमने अभी बताया
क्रिमिनल
ना,
प्रोसीजर
अब सब हमने अभी बताया, अब उसी से संबंधित ही रहेगा.
That was Timsy Jaipuria there in conversation with Arjun Ram Meghwal, who has just taken charge as MOS independent charge for the Ministry of Law and Justice. But back to our conversation on the recent proposed changes by SEBI for the F&O space. Moin, thanks a lot for staying on. My question to you was on the market-wide position limit aspect, and the recent proposal now says that that needs to be enhanced to anywhere between 1250 to 750 crore. Now, SEBI in its consultation paper says that the turnover for the market over the last 6 years, between 2018 till date, has gone up by 3.5 times. But has that reflected in the stocks as well? Have they seen a proportionate increase in the average daily turnover for them to have that kind of a vision to increase it to that limit?
I think it's a very difficult question because this won't be market-wide or across all stocks. But there would be certain stocks that have seen an increase in the volume and the trading volume. And we've also seen increased participation of retail investors over the last few years. That being said, the idea SEBI has made this reference in the paper is to really say that therefore stocks with a good volume, with a better quality in terms of liquidity, market depth, are eligible now to be in the derivative segments and therefore can continue to be in the F&O list. I think that's the intent we really have.
Sure. Okay, we have more footage coming in. More ministers, of course. Okay, there's
Shivraj Singh Chauhan taking charge.
Yeah, there's a puja happening, I think, starting his day or his stint of with a small prayer there.
Yep.
So Mr. Shivraj Singh Chauhan takes over the important charge of agriculture and rural affairs and rural development, and of course that's an important, very, very important portfolio. And I suppose if sort of you look at the discourse around it, his success in Madhya Pradesh and perhaps the connect with the grassroots level voter is something that the government will look to capitalize on in Modi 3.0 as well. So that's all the action in New Delhi. Moin, just very quickly to come back and round up our conversation before we let you go. My simple point is this: a lot of the norms that are being proposed right now, they seem overall, healthy regulation and regulation coming of age for the F&O market. Does it at all come back to that point that SEBI was making, that 90% of the retail people, or in general, 90% of the investors, they lose their money in the F&O market? I mean, from whatever you've said, none of these norms seem to imply to me that this will curb retail participation in F&O, because like you mentioned, for all you know, a lot of the new age stocks like Zomato, etc., they could actually be finding a place in the F&O market. So there are no curbs that SEBI is proposing.
So I think the approach doesn't seem to be to stop retail investors from participation. We've seen increased interest amongst retail investors. The interest will continue to increase. We've seen an all-time bull market for a reasonably long time now. I think SEBI as a regulator wants to let the opportunity be available, but put measures in place. And also, as you rightly said, expand it for new age stocks, which will create an opportunity in this segment. In terms of losing money in the market, there are other measures of investor education, etc. But one cannot take away an opportunity. And if you're thinking of a threshold or eligibility to come only as an institutional investor, that's not something that's on the cards at the moment.
Moin, take a moment to thank you for joining in and sharing in your views on this consultation paper issued by SEBI on stocks being included from the F&O space there. Moin Lada from Khaitan and Co. But meanwhile, footage coming in from New Delhi, JP Nadda taking charge at the Ministry of Health and Family Welfare. They've been inducted as the new minister there. Now remember, JP Nadda is a Rajya Sabha MP and he's been included as the Minister for Health. He's replaced Mansukh Mandavia, who was the earlier health minister. There you can see JP Nadda there taking charge as the Union Health Minister. So live visuals there coming in from New Delhi. Remember, JP Nadda also the president of the BJP. So it will be interesting to see who now takes charge of the party affairs now that Mr. Nadda has been sworn in as the chief minister, as the health minister, beg your pardon, there in the Union cabinet. So there you can see visuals coming in for JP Nadda there taking charge at the health ministry.
Okay, all right. So that's the action from New Delhi. We'll take a break and come back with more on the markets.
Welcome back. The Nifty continues to gather some more steam now from the day's low. We had started the show at around 22,300. It's now 30 points higher from those levels as well. Now 75 points higher on the Nifty, heading towards that 22,350 mark. And Mitesh was also highlighting that 22,350, 22,370 are those key levels to watch out for. 23,350, I beg your pardon. Those are the key levels to watch out for on the Nifty. So we'll keep an eye out on the index as well. A lot of movers as well. ONGC, the top Nifty gainer in today's trading session, almost 4% higher now is ONGC. Now Jefferies had come out with a note saying that the recent correction that the stock has seen should be used as a buying opportunity. Remember, the stock has corrected from its 52-week high somewhere around 292, 293 and to levels of around 260, and now it is seeing this up move in today's trading session is ONGC. What's also doing well is L&T. That stock is also now above the mark of 3,600. It's there trading with gains of around 2% is L&T. It's been quiet over the last few trading sessions. The last 2 weeks it's been flat, but over the last 1 month the stock has seen some gains. But there's Shivraj Singh Chauhan there taking charge at the Ministry of Agriculture. Let's go across to him.
सेवा के लिए हमें सौंपा है। आपका सहरा आ रहा है। किसान अन्न के भंडार भरता है और कृषि भारतीय अर्थव्यवस्था की रीढ़ है, जो सारे देश को अन्न खिलाता है, अन्नदाता कहलाता है। उस किसान का कल्याण प्रधानमंत्री जी की सर्वोच्च प्राथमिकता है। कृषि से ही भारतीय अर्थव्यवस्था और मजबूत होगी और हमारी सरकार प्रधानमंत्री जी के नेतृत्व में निरंतर 10 वर्षों से किसान कल्याण के कामों में लगी है। मुझे कहते हुए खुशी है कि प्रधानमंत्री जी ने कल जो सबसे पहले फैसला लिया वो किसान के हित में ही लिया। किसान सम्मान निधि जारी करने का उन्होंने फैसला किया है। भारतीय जनता पार्टी की सरकार ने पहले भी किसानों के कल्याण में कोई कसर नहीं छोड़ी। अब एनडीए की सरकार इन कामों को और तेजी से प्रधानमंत्री जी के नेतृत्व में आगे बढ़ाएगी। प्रधानमंत्री जी का संकल्प है किसानों की आय दुगनी करने का, उसके लिए निरंतर काम हो रहा है। उसमें और भी तेजी से हम सब मिलकर काम करेंगे और किसानों के कल्याण के लिए हर संभव कदम उठाएंगे। राजनीति में हम अपने देश की सेवा के लिए हैं, जनता की सेवा के लिए हैं। किसानों की सेवा, जनता की सेवा हमारे लिए भगवान की पूजा है। मैं स्वयं, मेरे साथ पूरी टीम, मेरे मंत्रीगण यहां पे हैं, एक टीम के रूप में अधिकारियों के साथ मिलकर हम काम करेंगे। परिश्रम की पराकाष्ठा और प्रयत्नों की परिसीमा करेंगे। आज ही मैं संकल्प पत्र अपने अधिकारियों को सौंपने वाला हूं बैठक में, जिसमें भारतीय जनता पार्टी ने किसानों के कल्याण के कौन से कदम उठाएंगे, उसके वचन मोदी की गारंटी दी है। उनको पूरा करने के लिए भी आज से काम प्रारंभ होगा और हम सब मिलके खेती और किसानों के कल्याण उस काम में अभी से जुटते हैं, अपने आप को समर्पित करते हैं। धन्यवाद। आज इतने, बाकी चर्चा बाद में करेंगे, बाकी चर्चा बाद में करेंगे। आज प्रारंभिक है।